Good day, traders. This is Roger Scott from Market Geeks with another video tutorial for you today. Before I begin, I'd like to remind you to visit MarketGeeks.com to download your free swing trading report. Finding breakout stocks is both an art and a science. Traders rely on visual analysis as well as technical indicators to help them find high probability setups that produce less false breakout signals. Today, I'm going to show you a few patterns that are currently setting up in today's market environment so that you can see by way of example the type of setups that we're looking to trade in the coming weeks. Keep in mind that these are not trade recommendations, but a visual analysis of setups so you can see how we visually analyze stocks when they're setting up. The first pattern is a bullish inside day pattern. The pattern is a simple short-term pattern that has 3 days that are inside of each previous day. The pattern looks like a mini triangle pattern and occurs frequently after a long trend comes to a temporary pause for a few days. What I like about this pattern is it provides a low-risk entry opportunity for traders because the volatility and the length of the trading bars are greatly reduced from the normal day-to-day volatility of the stock. This provides a good low-risk entry area without having to incur excessive risk due to extended volatility, which causes extended trading range and more risk to the position. You can see in this example how MDCO stock is still in a strong uptrend and is consolidating temporarily. The stock looks like it will continue moving to the upside in the very near future. Traders who follow my tutorials know that one of my favorite stock patterns is the tail gap strategy. I wrote several tutorials on this strategy and I can recommend you review them at MarketGeeks.com or our video channel. The strategy is a pullback away from the main trend that is accompanied by a gap. You can see several tail gap pattern setups in this example of Sands Hotel stock. Notice that I'm only taking long tail gap trades because the long-term trend is clearly up. The tail gap setup usually lasts just a few days because I want to see the stock go back quickly in line with the trend. A reduction in volatility and trading range is not what I want to see after the setup is triggered. I like to see the stock get back in line with the trend within a few days of triggering this setup. You can see in this example how this chart falls very quickly back in line with the trend after trading higher after the setup is triggered. Some of the best setups are combination patterns, meaning two patterns occur at the same time. This increases the probability of trades working out even further, especially if both patterns have no conflicts between them. In this particular case, we have a one-year high breakout coupled with ascending triangle pattern. Notice how the stock tried to break above the resistance area several times before. The trend is strong and everything technically points to increase in price of this stock. When several indicators or technical chart patterns set up in line with each other, it truly creates the best environment for short-term trading. When analyzing stocks for high probability setups, make sure to analyze the underlying sector and make sure the majority of the stocks in that sector are pointing in the same direction as your stock pick. Moreover, make sure the stock market is also pointing in the same direction as your stocks because, as you know, there is a very strong correlation between the stock market and individual stocks. Many failed trades could have been avoided by following these two basic principles and using solid trading setups like the ones I just demonstrated. That's it for today's tutorial. Don't forget to visit MarketGeeks.com for your free swing trading report. Wishing you the best in your trading.